So wait, before I start, like, what do you guys think Bitcoin mining is? What's your thoughts on it?
A bunch of really smart people using computers to I think it's like an algorithm or something that like you run to solve equations and then you like
Yeah, it's like
solve blocks or something. I looked into it a little bit, but I don't. It goes over my head.
yeah, we'll get into detail with it. But to start off, I think a great analogy I would like to start off with would be like just in real terms, comparing it to how the gold mining industry works. So first, like you would have to survey the area. You would have to figure out, okay, like where is the gold? So I know I have a friend who like works up north. Like every summer, he has to like go around and like look. Okay, like every kilometer, you have to take a sample out of the ground. Like, oh, is there going to be any sort of gold or precious metals, anything in the ground there? And then from that, they can get a rough idea. Okay, like the gold might be here. And then if there is, they would want to build. Then you allocate resources. You start investing resources. You build like a mine there. You get a drill, and then you try to extract the gold out. So like why do mining gold mining companies want to do this? Because it's all about like the underlying asset, so gold itself. So what makes gold valuable? It's really like it's a scarce asset. So there's only so much gold in the world. So if you were able to find through your samples that there's some gold maybe in the ground, it could be worth it. But it also depends on the price of gold at that given time. So if gold is increasing in value, there might be a better opportunity cost for you to mine or not for you to drill at the specific places more often to try and extract more gold because it's becoming more valuable. And it's also a store of value. So you can look at past data of gold. It's been around for thousands of years. There's probably a future, like you can predict that it'll have future value based off its past data, and that gives it store of value. That people trust gold in terms of being like hard money. There's only so much of it. So why am I explaining the gold mining? Like why does that relate to Bitcoin? In a way, it's very very similar. So you're just taking everything that the gold mining industry kind of does. It's not exact, but you apply that into a digital format. So basically, I don't know, like instead of using drills to mine Bitcoin, or sorry, so instead of using drills to go get gold, basically you're using computers to try and find the Bitcoin through using complicated mathematical problems to find that hash that would really allow you to get that Bitcoin, which happen. Victor will go into detail, but every 10 minutes, 6.25 Bitcoin gets generated. And it's really just random. Instead of you like going out into the land trying to find the Bitcoin or trying to find the gold, you're really just trying to solve these mathematical problems. And if you get the right one, you get the Bitcoin. So you invest into the resources for Bitcoin mining. As Bitcoin's value goes up more and more, it makes it more attractive and more incentives for more computers to join the network, for more miners to try and find more energy efficient ways to mine so that they increase their profits and stuff. So there's really incentive for both, gold and Bitcoin, as they're both kind of similar in that store value, like my opinion, but they're both scarce assets. So, they act similarly in how the mining works. One's digital, one's more this more real life. So it's just a good analogy in terms of what the mining is. And Victor here will go into like more what is it? Like what is Bitcoin mining? So
what is it? In order to understand very well what Bitcoin mining is, we have to know a little bit of the basics of a blockchain. Basically, a blockchain is a distributed ledger, which means that everyone who is participating or have an account in the network has access to a copy or multiple copies of this ledger, and we call that copy a block. So if everyone has a blog and everyone can read the blog, how can you prevent someone editing the blog, right? So in order to achieve integrity and security, blockchains, which are distributed ledgers, use something called consensus mechanisms. And these consensus mechanisms can be in multiple ways. But the main consensus mechanism that is in the Bitcoin network is the proof of work, also known as POW. So what is that? Well, this consensus mechanism allow you to create, when you have a block, which is the image that we have here, you have multiple data inside them. So Riley, can you go to the next one, please? Thank you. So when we look at the block, we have different parts. So in order to understand mining, we have to understand the basic component of the blockchain, which is basically the block. So we have that the block has a height, which is the number of the block that is assigned in the network. So we have that each block in this case have a reward. Right now, it's 6.25 Bitcoin, around 6.5, as Riley was mentioning. But a long time ago used to be way more. But this has been changing during time due to multiple factors. Also, we have that the Bitcoin block has also a certain number. If we look at the white paper, we have that these blocks have a size of 1 megabyte, and they can store it around maximum 4,000 transactions, but they can have an intermediate of these transactions. For example, here we have an example of the block that has the block 729 624. That block is actually a real block, and I just put it today. And that one has a number of transactions of 2,935. We also can see that these blocks have a mining date and time. All that information that is inside, it goes into a cryptographic algorithm that creates a hash. This hash function is unique according to the information that is inside. What kind of information? So the date time in which the block was created, the number of transactions, and what is inside, including the reward. So all that gets storage and has a unique fingerprint. So it's something that we can see here where it says hash. I have done like a little animation simulation of how they look. And if we see these hashes that go in order, they have this they follow like specific hash that eventually they both match and they both follow a sequence, which is a chain, and that's why we call them blockchain. So in order to verify these and allow that there is no like problems of double spending, which is something that long time ago when scientists that were creating the internet were trying to like send and create value on the network, they found a problem that is called the double spending problem. So if you have a digital asset, how can you prevent that the coin or the token that you have, it's being created double? So what is Bitcoin mining? So basically Bitcoin mining is a technology that allows you to verify the transactions and everything in the blockchain. In this case, for Bitcoin, is transactions, but also could be any other kind of information that is in a blockchain. And in order to do that, you need a lot of energy. So it processes, confirm, and verify the transactions using proof of work. So let's go with the next one. So why is important? Why Bitcoin is important, Riley?
Oh, so yeah, why is it important? You explained it really well, and just as you were saying, like it helps prevent the double spend problem. So just another analogy. Hopefully, I explained this well. I'm trying to explain analogies well, but let's say you go into the mall, and let's say you own a store, you own a shoe store, and then someone comes to buy a pair of shoes with their Visa card, and then they taps, it verifies, they leave, but here's what the double spend problem really is. Let's say that person has access to the ledger for the bank where it said it approved, and he kind of edit that and like, oh, that transaction never actually happened. And then he goes back in the store, buys another pair of shoes with the same dollars that was used on the first pair of shoes. Now he got a 2-for-1 deal, and he just lost out. So then, ultimately, if that happened, the whole thing would just, the whole ledger, the whole system, Visa card would not work at all. Like the whole thing wouldn't have any value. So it's very, very important that this is probably it is probably one of the most important things that Bitcoin mining helps prevent the double spend problem. You need to have enough security, and you would have enough, just enough security is the biggest thing to prevent anyone to have any sort of way of alternating what that ledger, what the transactions have done, what it is. So, and traditionally it's always been centralized. So that's why like the banks, like they all control all these different ledgers and transactions, basically just basic accounting, debits and credits, all the different transactions that happen. But to make it decentralized, something that Bitcoin has accomplished, it took a lot of, it's very hard to do, as you would need like a lot of computing power from multiple miners to ensure the security to make that really happen. And there were projects before Bitcoin that tried to make something like this happen, but it really, a lot of them failed because it really came down to centralization of some sort of entity and decentralization where you have no one in control of it. It took a long time for something like that to really like happen and to make that actually work. So that's why there's a lot of value as well too, is that no one controls the network. Anyone can become a miner, even though it's pretty crazy nowadays. You look at the photo here, like that's probably just one miner right there nowadays. Back then you could have been a miner. You could use like your desktop at home and just kind of mine Bitcoin. But nowadays it's hard to be a full miner nowadays. But we'll get into the different types of mining. Victor will explain that. But yeah, so I think ultimately with the Bitcoin mining, it would ultimately, why it's important, I think soon it would help create clean energy incentives and alternatives. It really provides like an incentive, like as Bitcoin's price goes up more, there's incentive for miners to go to places to create clean energy. Like it could be energy dam, there could be like dams or anything that provides clean energy that wasn't active before. But then these miners now have the incentive to like, oh, like we can like use this energy, and then anything extra could go to the community like nearby. So there's a lot of good incentives in terms of how energy can be efficient. There's some more examples we'll go into actually in this presentation.
So speaking of that timeline that Riley was describing, like how a long time ago you were able to verify a transaction, that was a long time ago. So why? Because there was not enough demand, and also there was no race for who gets the block reward sooner, right? But right now, the demand for using the blockchain, and also like when I say using, is like how do you use the blockchain? For example, in this case, how many payments are being done on the network? So in order to verify all these payments and transactions, you have to use the network a lot. And in order to know that this is a legit transaction, you have to verify them. And in order to verify, you need energy, and you need computer chips that can solve all these algorithms. And because of that, we have seen a spike on the chart that we have seen here, that it goes very, very sudden, starting on like 2018, when the cryptocurrency started to become a little bit more mainstream. And it wasn't something that it was only in the crypto world. So we can see that a hash rate is basically an indicator of the network security, because as we were mentioning, it tells you the number of miners that are like verifying the transactions. Next one.
Yeah, like the amount of power that's being used, like that total hash rate. As you can see in the chart, there was a big drop off last year. There was a big it went down like 40%, and that was the crackdown for when China did their ban on all the Bitcoin mining. That's what happened. So there was a lot of miners that were in China. It was probably like 40 or 50% of the whole network. So all at once, they all went offline almost. And majority of them have moved over to the US. So US now is actually the biggest Bitcoin mining in the whole world now. So pretty interesting for all that.
That's right. And for example, here we can also see the timeline of mining in terms of hardware. For example, Riley was mentioning that back then in 2019, when Bitcoin first came out, you were able to mine Bitcoin using your computer, using a CPU. And eventually, as Bitcoin started to become more like mainstream, and people started to see more value on the project, an arms race on who mines more blocks started to appear, and therefore you needed to use more computer power in order to solve these blocks in a faster way. So that was the reason of why we can see that huge spike that started around 2010. And then you could see how CPUs were no longer useful. So you needed to use like graphic memories and stuff like that from your computer. But then that wasn't enough. So you started to go into this very specialized semiconductor like chips in order to achieve the level of performance to solve these mathematical problems. And then we can see here that right now we have a company called TMSC, which is a company that produces chips in Taiwan. They actually develop very specialized this kind of specialized ASIC chips in order to solve this proof of work algorithms. And yeah, we can continue to the next one.
Well, just to throw in one thing too, if you're gonna try and mine with your desktop today, you could do it. You could try. You can hook yourself up to the network.
Yeah.
But I remember telling Victor this. I think the odds were it would take you 140 years to mine just one block. That's the odds. That's the odds you have. And that's at the current network power right now. So as things get more difficult, it's pretty much impossible. But as of right now, it'll probably take you 140 years with the current power, the current the current hash rate right now. But if it keeps increasing as it is as this chart here, it just becomes more and more impossible for your desktop to ever have a chance. That's the chances of mining a block, 140 years. So I don't know. I don't know if we'll be around 140 years to get that block, but but yeah, that's an interesting fact that I found.
Yeah, also that's considering that the computers are not gonna increase. That's like having the technology right now as it is right now for that amount of time. But imagine if the computers will continue increasing their computing power thanks to the Moore's law, and probably that will take longer if we don't if we add this this constant. But yeah, it's a lot of time. So that's why we need these specialized chips that we were mentioning. So now let's speak about software. So in order to use this equipment, you need very specialized software. And one of the most famous ones are like CG Miner, Multi-Miner, Awesome Miner, and BF Miner. So some of these are allowed pool mining software, some of them. So what is pool mining? It's basically when you have the hardware, right? But through an interface that you need to use in order to see how many Bitcoins you're mining, how many blocks you're verifying, you need an interface to interact with the computer. So this software gives you the interface for you to understand what is happening behind and receive rewards. Some of these are like online, so you can like enter and give the power of your chips and start producing and start verifying transactions. And because you are on a network, you can like receive the rewards and see and contribute into a pool where you can like manage your assets and everything. And we can go to the next one.
All right, so
So regulations. Yeah.
yeah, so regulations. So that's a big thing, and it's really divided based on countries, really, just different regions. There's not just one regulation; everyone follows that. As I mentioned earlier, like China, they completely ban Bitcoin mining, so there's no mining there at all. Other parts of the world, I know Russia. I read like probably a few weeks ago, they're actually giving incentive. They're giving incentives to having Bitcoin more mining in their country. That's something I read from a few weeks ago. And you also have like the EU, like the European Union had a vote. They had two of them actually, like one last week and another one the week before, if they wanted to try and ban proof of work. So that's what Bitcoin uses for mining. Like they're gonna think they're almost gonna ban it, but the vote came out 60% against it. So they didn't actually ban it. It was really close though. But they wanted to. I think there was just really a lot of like they just think there's like a lot. There's people that a lot of people think it's really bad for the environment, which in some cases it looks like it's true. Like it does use up a lot of power, but as we explained, like it can provide a lot of incentive for new methods of energy, new methods of using clean energy in different locations, and providing that to the community as well surrounding it. That's something I think moving forward that a lot of these miners will probably do, and that's something that is something really pretty big, for creating incentive to find new ways to create energy. Um, yeah, it's big. So, but I think it comes to regulations for U.S. and Canada. It's pretty open, I would say. Like there's a lot of mining in the United States. It's one of the biggest right now. But there would definitely be a big push though for ESG, so environmental, social. I think it's social and governance standards. So basically, there'll be a lot of regulation for all the miners that use anything that's not renewable. They're going to be in some big trouble. So as long as the miners are using green energy, so anything that's solar, wind, hydro, I think a lot of those miners will be fine and they'll continue mining. But there'll be a big kick out for all the miners that are using coal and anything that's not good for the environment. All those will have trouble, I think. So yeah, I think there's a lot of regulations that will be happening, and it's gonna be different everywhere in the world. So yeah, so if we look at Bitcoin mining on the map here, we can see United States is really up there. China now has nothing, so as you can see, it's this blank there. But it's just different parts. And here in Canada, I think just talking to Victor, you said it was fifth, right, in the world.
Yeah, one of the fifth, but right now it's using like that it's investing on like mining and stuff like that. So if you would like to like maybe do a project of that, that would be cool. Canada is one of the countries that are very like not restrictive with the cryptocurrencies, and actually they are very interested on the topic. So that's pretty.
But it kind of shows too, like Bitcoin mining is really spread apart. Like it's in so many different countries across the whole world. So you can't just pinpoint to one central location and be like, oh, like if they do something with mining, then the whole thing's done. Like you got so many countries now that have Bitcoin mining, and and it's just the whole network is really secure because of that. There's so many different locations it's in. So
Yeah, and there are also can I go back? There are also
sure,
multiple can we yeah there are also multiple factors of why like these locations are shown in these colors. The first one, it could be something that Riley were mentioning, the electricity rates, like which countries have the most affordable electricity bills in order like to mine, because mining requires a lot of energy. So if you want to actually get a profit from it, you need to go to parts of the country where you are, where most energy is almost like affordable, in order to create more profit. Another thing is like the ability of getting like green energy, as Riley was commenting, because that also will create like a little bit of like a friendly environment to allow you to mine. There's also something called like the local talent. What does that mean? It's like in some regions there is actually like the knowledge about what Bitcoin and the technology behind it's scarce. So in order to like for you to arrive and start to creating these kind of projects, you have to know where you go, and also that will allow you to have a friendly in terms of regulation environment with the mining that you want to do. Yeah. And in here we can see like that spike of energy consumption that started to appear since the Bitcoin started to become mainstream. And right now we can see that worldwide, the amount of energy that Bitcoin uses in order to verify the transactions is equivalent to some countries. It started like to Israel, then eventually go to Argentina, and now it's almost as Sweden. And then we have other comparisons there, which are like Spain and the UK in the maximum points that we can see. So that's a lot of energy. So having a green source of energy, it's way better than having to use like fossil fuel energy sources. And then we have here a map that shows the average electricity prices per state in the United States. So some of them may be more better candidates to actually create this mining operations.
Yeah, and right now, like I believe Texas is probably the biggest of the states. Like they're the leader in terms of the United States, and of that, it's the world, right? So the biggest state in the states is probably Texas in terms of Bitcoin mining. And a good reason for that is the price is cheaper, as Victor was saying. Average cost is pretty low for there. So yeah, just a quick case study here. El Salvador, like they're first to adopt Bitcoin as legal tender. They're actually raising money. They just raising 2 billion. I think they're calling them volcano bonds to build a Bitcoin city, which would be really cool. I think it'd be a cool place to visit, maybe move to. I don't know, but they're gonna start constructing that. Like I think as soon as they raise the money and everything. But ultimately, though, they'll have a Bitcoin miner in the center of the city, and with that, they'll be using the energy from geothermal. So it'll be from the volcano, the heat from the volcano and the lava. I don't really know how much geothermal, how all that works, but it's all clean energy. It's just the heat from underneath the crust. And basically with that, they use that to power the Bitcoin mine to generate the revenue. And then with that, that powers the rest of the city. I think with all that too as well, they're providing zero income tax, zero property tax, zero capital gains tax. There'll be no taxes if you live in the city. I think a big reason because of that is because the amount of money the Bitcoin mine will probably make, and just being a contributor and being a citizen in the city, you don't have to, you don't have to pay anything really. So I think that's a huge plus, and one reason why Bitcoin mining in the going into the future, can help a community like this, like building a city and providing incentives where citizens don't have to pay tax or anything. So I think, it just generates revenue, and then you can share that within the community. I think that's really powerful and good. So
Adding
and
to
that's that.
this, there is some facts that we need to know just to recall a little bit. So right now, Bitcoin has a total supply of 21 million coins, and we have like mine around like 19 million. So we're still having 2 million to be mined. And also takes like 10 minutes to verify a block, as Riley was mentioning. And it takes around, yeah, and the blocks are like 1 megabyte of size. And yeah, that's a little bit, for example, and also another thing, the average amount of like blocks that are mined per day right now is around 900 blocks per day.
And just to throw out too, I think the miners made roughly 15 billion last year. So it's a pretty profitable business right now. Like in terms of the price being where it is, like I think miners are making, yeah, like it's in the billions per year. Like not profit, but like that's the revenue. So
Sorry, 144 blocks and 900 bitcoins per day. Yeah, that makes sense. Yeah.
oh okay, yeah.
144. Yeah. Yeah, because it takes 10 minutes to make them. So yeah, 144.